Yes, good afternoon, students. This is CA Rajeev, Sachdeva, Faculty Member, Board of Studies.
Yes, and myself, CA Sharma.
Yes, students, this is probably the last lecture we are delivering. In the past lectures, we have taken you through the company audit and basic concepts. First 4 chapters, basic concepts we have covered, and company audit we have covered. Also, essay 200, a small portion of essay 200 was also covered. Students, throughout my lectures, we have tried to explain how to study, how to plan your studies, how to study the basically law related topics. I just passed on to you the whole strategy behind passing and scoring the good marks in this particular auditing examination. Students, you need to have the holistic idea how this subject has to be handled. It has to be handled in very careful manner. As we come across through students who come to us and are scoring very low marks, say in the range of 20, 30 or so. So students, to avoid this thing, believe me, my strategy, if you work on my strategy, just work on it, I assure you, you will score very good marks. Still students, if you want to work on, if you till today you did not work on any strategy, just try to work on this. You will find the difference. Of course, there is now time left is very low, very less, but still you can work out on this. You can increase your hours of study, say 6 hours at this moment of time. You need to put in hard work basically. There is no substitute of hard work, I tell you. And in particularly theory papers like auditing, it poses a lot of challenge. So students, you need to meet out the challenge. And the strategies, although I have disclosed in each of my lecture the particular strategy in respect of every chapter, I have to try to tell you. In today's lecture also I will tell you how to handle, how to answer, how to strategically handle this examination, particularly auditing paper. So students, in my opinion, 1500 hours of study is a must. Before I move further, I read out the disclaimer. Yes, students, you are advised to refer to the institute study material, including supplementary study material, if any, and other relevant legislation for latest provisions, amendments required for May 16 examination.
Yes, students, please remember the relevant notified sections of the Companies Act 2013 and any other legislative amendments, including the relevant notifications, circulars, rules, guidelines issued by the regulating authorities up to 31st October 2015 is applicable for your May 2016 examination, which means any of the notification issued up to 31st October is very well applicable for your May 2016 examination, only if it is related to your subject auditing. One more important thing, the CARO 2015 issued by the MCA on 10th of April 2015 is applicable for your May 2016 examination. Students, please note there are 12 clauses in CARO 2015. You may refer our practice manual for the practice of questions on CARO or the presentation skills you may get through our practice manual on how to present the answer asked in the examination. Here the CARO provisions is applicable for your examination. Please refer practice manual for this. Well, these are some journal queries we received through mail or telephone, which we have tried our best to answer these. The first important query students usually ask is what are the relevant amendments applicable for May 2016 examination. Students, you need to refer the list of pronouncements that is the applicability of standards is very well hosted on institute website and it is very well published in students journal. You can refer the list of pronouncement and then you need to refer the one important thing, that is the revisionary test paper RTP applicable for your May 2016 examination, where we have mentioned many updates like changing on number of company audits, which is related to your chapter 7 company audit. Then you will find guidance note on reporting under section 143, 3F and H of the Companies Act 2013. These are the basically changes or say the amendments applicable for the May 2016 examination. Yes, you can see here. Please refer the list of announcement posted on the website and then published in the students journal. You need to refer the academic update part given in the RTP applicable for your attempt. Another important query we usually receive, how to prepare for the answer. So please.
Yes, students, how to prepare for paper 6 auditing in an effective manner. Yes, students, as you all are aware, this CA examination is a strategic type of examination. This is a strategic type of examination and you need to prepare your strategy for the examination. How this is a strategic type of examination, I tell you. Students, in earlier classes up to I am talking of up to 12th, 9th, say I am taking example of 4 classes 9, 10th, 11th and 12th. In these classes, students, you studied, devoted one complete year. 1 complete year for 9th, 10th, 11th, 12th. 1 year you studied for 1 year around. Out of 365 days, if I exclude the normal wastage, say, still you might have studied for at least 320-30 days. And if you studied for, say, 8 hours on an average, so you studied for 2640 hours basically. This much of hours you studied in your 9th, 10th, 11th, 12th each class. Now students, what I am recommending to you is at least 1500 hours of study for your one of the groups. Now 1500, if I divide this by 10 hours, now you study for 10 hours a day, so this becomes 150 days. Whereas in class, and this is equivalent to 5 months, And in my opinion, CA students study 3 months, 2 months, 4 months, 5 months. Rarely students are studying basically, they are not devoting much of the time on studies. So 1500 hours is a must for every student to study. So if you are devoting say 1200 hours or 1000 hours, 900 hours, 3 months, 4 months, then you need to prepare a definite strategy. I am very sure about this. Now, this is a part of strategy I am telling you, that you study for at least 1500 hours. This is a part of strategy. At least 5 months. And now 5 months is not a lengthy period. It is not a long period, I tell you. It is again a short period. This one group is equivalent to your 1 year of examination. And I want to achieve in just 5 months. So naturally I will have to prepare. I will have to work hard for this, for achieving my goal, for passing the examination. And I will have to continuously study for 5 months. There should be no gap in between, 10 hours daily. So students, one thing I am sure and message you have got is 1500 hours of study, means 5 months of study. Second point in strategy is you should prepare, you should document your studies. Just document your studies. You should prepare daily schedule register. How you will document your studies? Daily schedule register. Whatever you do, just record in this register. Date-wise record in this register, daily schedule register. On a particular day, say on 1st February 2016, what do you study in audit? Company audit. Which section you studied? For how many hours you studied? Then in accountancy, what you studied? Then IT, what you studied? Strategic management. So this is how you will document your studies in daily schedule register. This schedule register, daily schedule register, will help you out in planning your studies. This will monitor your studies. This will tell you when to revise one topic and when to revise the other topic. So this gives you a complete plan, complete detailed plan of your studies, monitoring of your studies. You can just track your studies also. How much I studied in last 1 month, how much I studied in last 2 months. So everything is documented. If I asked you today, what you studied in last 4 months, you are unable to tell me, I tell you. But students, those who are preparing this daily schedule register, they are definite, they are very planned students. And they know what we have done and what we have to do. So this register, daily schedule register, helps you out in monitoring your studies. This is the second point of strategy. So students, 2 points I have disclosed, I have conveyed to you. One is 1500 hours of study for one group, and second is document your studies. Third point is prepare brief notes. And before covering third point, I would like to cover fourth point first. Learning strategy. Learning. Students, there are certain topics in auditing which require learning. Learning is very essential. And company audit Company Audit-1, Company Audit-2. Definition part, definition portion in first 4 chapters. Points in whole auditing in all chapters. This is the thing. This is approximately 30 to 40% of the syllabus, which I say you should learn very religiously. I tell you, you should learn from all of your faculties. Just keep your mind, brain, soul, etc. in one direction only. That is learning, learning, and learning. And there are certain strategies of learning. I tell you, there are certain strategies in respect of learning. Strategies, learning strategies, I tell you. Learning strategies. Say you learn a particular, say section 139.1, 139.1 and 139.2, rotation of auditors, appointment of auditor. You learn on a particular day, say on 1st of January 2016. Now you record it in the daily schedule register. Daily schedule register will tell you that you learned this topic on 1st January 2016. Now second time revision, second time learning. Second time this topic has to be revised on 3rd of January 16 after a gap of 1 day. Yeah, on second day you can revise, second or third, this is your choice. And this you again record in daily schedule register, will tell you. Now third time revision. Third time revision is after 10 days. Say on 13th January, again you will revise this and record it in the daily schedule register. This is how you are monitoring, planning your studies. Now fourth time revision, students, this is after 1 month or so, say on 12th of February. 12th to 20th February, any day you can revise, and this is the final revision. When you learn 4 times, the things, believe me students, the things get established in your mind, things get cemented in your mind like A, B, C, D, E. Like you can remember at this stage, you need not recall A, B, C, D, E, F. Likewise, you will be able to recall section 139, section 139.1, section 139.2, 139.3, 4, and so on. So students, learning will take your time, no doubt on this. You need to devote much of your time on learning, no doubt on this. But that will build a reservoir in your mind, a complete backup in your mind, and which you will come out with that in your examination. So students, and third point, after point number 4, there are 4 points I am telling you in this strategy part. First, study for at least 1500 hours study. Second, document your studies, daily schedule register. And third is prepare brief notes. Fourth, learning strategy I have disclosed to you. Prepare brief notes. And brief notes, first you learn, then write. And when you will write, that will be your brief notes. So always prepare brief notes. I asked Preeti to share her experience on this.
Well, sir, you already explained it clearly how to prepare. Well, in this IPC, at IPC level, the chapters are divided into 9 parts. The same you can go for your strategy part and divide your learning in 9 parts, chapter wise. Yes. These are the points already explained by sir. You need to learn the definitions given, like the definition of a government company, the definition of a private company. You need to refer while answering your questions in the examination. Preparation of brief notes. Yes, you can tick mark a particular question which is covering a lots of provision under the Companies Act, or the verification part, or the vouching part. Any of the question you think the major provisions are covered here, then you can tick mark that question as a brief note and then revise the same during your examination or one day before the examination. You can prepare a chart presentation on your own language for quick revision before the examination. This would be obviously requiring a minimum time for revision of the material. Yes, the 9 chapters divided. The part 1, that is the chapter 1, which is on the nature of auditing. This covers all of the standards on auditing. Then the chapter 2, basic concept. Chapter 3, preparation. Chapter 4, that is the internal control and the internal audit. Chapter 5 is related to the vouching, which are, as you can see the pattern of examination, 4 questions are fixed from the vouching and verification part. Two question of 4 and 4 marks, that is the 8 marks is asked from vouching part, and then 4 and 4, that is the 8 marks also asked from verification part, which is you can score very good during the examination. Chapter 5, verification. Chapter 7, company audit. I think you must be aware in the previous attempt, lots of incorrect, correct questions were asked from the company audit part. So please, student, learn those provisions, learn those sections. Chapter 8, share capital audit. Chapter 9, and then the special audit. Special audits like the audit of a hospital, audit of a education institution, audit of a club. These chapters are covered. These topics are covered under chapter 9. This is how you can divide your learning into chapters. Yes, the chapter 1, which is covering the standards on auditing. This should be applied during the audit of historical financial information. Yes, the standard. What is the overview of a standard? The standards on auditing contain the objectives, requirements, application, and any other explanatory material that are designed to support the auditor in obtaining reasonable assurance. Yes, you need to get the objective why this particular SAA has been created. Then only you are applied. Then only you are able to apply that during your work scenario. Just like the purpose, the objective of SA 505, which is on external confirmation. The objective of auditor, according to that SA, is to design and perform such procedure to obtain relevant and reliable audit evidence. Yes. You should study the standards. Please, student note, the auditing pronouncement booklet you need to refer, which is talking about the standards on auditing. There are lots of questions asked from the standards on auditing. That, as you can see, the question 1, which is of 5 into 4, that is 20 marks question, is asked from standards only. Then you have question number 3 or 4 or 5, which is again on standards on auditing. You need to comment with reference to essays. The particular situation is given, and then you need to comment with reference to essays. Please go through the essays thoroughly, because I hope 20 plus 20, 40 to 50 marks are asked from standards. So this is a huge coverage which you need to go through deeply. Yeah, the first 4 chapters, that is the nature of auditing, basic concepts, preparation for an audit, internal control, these all are interlinked with the standards on auditing. Yes, you need to do the repetitive reading. You need to learn the definition. You need to learn the points. You need to interlink the same with the standards. You need to read out the chapters 1 to 4 and then interlink the same with the standards on auditing. Yes, definition. Learn the definition. Learn the definition of a fraud, definition of auditing, important points like limitation of an audit, objective of an auditor, qualification of an auditor, limitation of an audit, inherent limitation of internal audit. These are the certain important topics which are covered in these chapters. You should have the knowledge of standards like SA 500, which is on audit evidence. This should be applied by working on articleship, while vouching and verification of certain items or profit loss item or balance sheet item, and fair view audit. These are just a few examples here which you need to take care while going through the study material. Audit technique, audit procedure, audit planning, programming, documentation, sampling, audit risk, internal control. The definition of internal control is given under SA 315. Yes. Meaning of internal control. This is just an example here. As per SA 315, it is a process. That is, the internal control is a process designed, implemented, and maintained by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of entities' objective with regard to reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with applicable laws and regulations. As you can see, all the perspective is covered in part of internal control, and this is how you can learn the definition. It is a process maintained by the management to provide reasonable assurance about the achievement of objectives with regard to reliability, effectiveness, and efficiency of the operations. This is how you can learn a particular definition by dividing into parts.
Yes, students, very well explained. If you look at the definition, it is the process. Now, about one thing I was explaining you in my strategic part that you need to learn. And so far as learning principle is, you need to establish in your mind the learning principle that learning has to be very slow learning. Do not be in hurry to learn. Never learn in hurry. Let's be slow in that front. I explain you how. Let us suppose I have to learn this definition. Now what I will do in parts. First I will understand, yes, this is SA 315 which is defining internal. It is the process. And this process, naturally, if a thing is process, it means it has multiple dimensions. This process is designed. There is the designing of the process, then it will be implemented, and then things are not ending here. It is implemented and our duty is over. No. This process, first we prepare that design of the, like, take the example of a building. First we prepare the design of the building. Architect prepares design of the building. Then we construct the building. Then for years we maintain the building. So it is also, this is internal control is also a process. This is designed, we design the entire internal control system keeping in view the requirements of the entity. This is in accordance with the keeping in view the requirements of the entity. Whether it is, we will consider whether it is large entity, it is small entity, it is medium, it is manufacturing, it is trading, it is charitable, whatever it is. So, internal control, while designing part, we have to keep in view these things. What is the requirement basically? Whether the organization will be able to bear the cost. Naturally, huge cost is involved while implementing, designing the internal controls, implementing and maintaining the. So you need to basically be careful from every angle. So internal control is a process designed, implemented, then we implement. After design is ready, then we implement it. Designed, implemented, and maintained by the management. Those charged with governance, no. Management means the whole organization, means if you pick up one word, that is management. So this is called the manner in which I am explaining to you. This is, just link it with slow learning. This is the procedure of slow learning. Slow learning, I am not asking you to just slowly just speak out the words in a slow manner, no. Move in a slow manner, no. Slowly digest these words in your mind and settle these words in your mind. So these will be more established, more cemented. Like it is the process by management. So up to this we have settled in mind that it is a process. Of course it is designed, implemented and maintained. And by whom? By management. Now we move ahead. It will achieve the entity's objective. Why we are doing that? Why we are designing, implementing and maintaining the internal control in respect of an organization? Because to prevent leakages. My answer is to prevent leakages, because there are leakages in the organization. Leakage of cash may be there, leakage of say store items may be there, leakage of inventory goods might be there. Another answer is safeguarding of the assets. I want to safeguard my assets. I want to keep my assets safe, in a safe manner. So I have to devise the system basically. So there might be, so it means the objective, entity's objective, I want to achieve the objectives of the entity. So coming back again, internal control is the process which is designed, implemented and maintained by management about to provide reasonable assurance about achievement of the entity's objective. Organization will get reasonable. Absolute assurance cannot be achieved. Here also, please remember, this is very important word, reasonable assurance. And reasonable assurance, please remember, is high level of assurance. This is high level of assurance. But this is, please remember, reasonable assurance is not an absolute assurance. Not an absolute assurance. Why it is not absolute assurance? Why it is only reasonable assurance and why it is not an absolute assurance? Because there are inherent limitations of internal control. Because there are inherent limitations of internal, I can never be 100% sure about that. There are again loopholes. It is an ongoing process. So students, that is why I am using the word to provide reasonable assurance about the achievement of entity's objectives. With regard to reliability of financial reporting, now what objective an entity want to achieve with the help of internal controls? Now objectives, in the last line, objectives are covered. Reliability of, so that my financial reporting is reliable. Whatever I am reporting is fully reliable. Effectiveness and efficiency of operations is there. Two objectives this. Look at the two objectives. Reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, third, and my compliance with the, I am able to comply with the relevant laws, applicable laws and regulations. So this is the complete definition as per SA 315. So Priti will take you through this definition again, and I will also explain to you once again.
Yes, very well explained, sir. The method of learning a particular definition is only by dividing it into parts. Just like sir explained the division of this definition, internal control given under standards on auditing 315. The standard states that the internal control is a process designed, implemented, and maintained by those charged with governance, management, and any other personnel to provide reasonable assurance about the achievement of entities' objectives with regard to reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with applicable laws and regulations. Yes, these all are the objective part for the maintenance of internal control. And this is how you can divide your definition into parts. That is, the internal control is a process designed by the management or those charged with governance, and why it has been designed to provide reasonable assurance about the achievement of objective of the entity with regard to what? With regard to its reliability, effectiveness, and efficiency of operations, etc.
Dear students, again I am telling you why internal control is there. So just have a grip over the 4 points, 4 objectives. Entity's objective with regard to reliability of financial reporting, first point. Reliability of financial reporting, first point. Second, effectiveness and efficiency of operations. Third, safeguarding of assets. Fourth, compliance with applicable laws and regulations. These are the 4 objectives which are contained in the definition itself. So if a question appears, if I have strong grip over the definition, if my learning is perfect in respect of this definition, and a question appears in the examination, what are the objectives of the internal control in respect of an organization, so I am able to write with the backup I am having in my mind. The backup is what? Definition of internal control. If I clearly understand, I have learned the definition, only then backup is there and I am able to excel in the examination. This is how you build up a base, build up the entire, you see, I see database, complete database of definitions in your mind, so that when needed, you are able to excel in the examination. You come out with those definitions in the examination, come out with those points in the examination, and I assure you, you will get very good marks. Gain conceptual and detailed knowledge on internal control. Testing of internal control. Communicating deficiencies in internal control. Internal control and CIS. The following topics I am telling you, you need to have full control over these topics. Gain conceptual and detailed knowledge on internal control. Continued. Have complete knowledge of internal check. Now, what is internal check? Internal check, it is basically the part of the internal control, and in internal check, work is divided among the employees in such a manner that work of one person is automatically checked by the other person. This is internal check. We divide the entire work among the employees, a particular work, say in respect of purchases, for example, in respect of purchases, and 4 persons are looking after the purchases. So I divide in such a manner, the work in such a manner that the work of one person is automatically checked by the other person. This is a system of internal check. Now you learn the definition, essentials, and what are the objectives and all that. General considerations in internal check. So have full grip over these topics which are appearing on the screen.
The vouching. Yes, the vouching. Now, what is a vouching? It is an act of examining vouchers. Vouching is usually done for the items appearing profit loss account, like the salaries payment or a conveyance, traveling expenses, purchases, purchase returns, sales. If you are examining these kind of voucher, then the act is called the vouching. It establishes the authenticity of transaction. It is the basic document which helps in establishing the authenticity of a particular transaction, that this transaction has been taken place in the organization. And another part, that is the part 6, which is on chapter 6, is verification.
Yes, students, coming back, the vouching, act of examining vouchers is called vouching. Now this is definition part, as I was explaining to you. Just have full command over this definition. The act of examining vouchers is called vouching. Now what is voucher? Voucher is a basically piece of evidence. What is voucher? Voucher is basically a piece of evidence you get while examining in support of the entries which are made in the account books. The evidence, the piece of paper, documentary evidence, in other words, documentary evidence which you get in support of entry made in the books of accounts, is referred to as voucher. So if I am, you see, checking a particular purchase, say there is entry in the account books, purchase from ABC Private Limited Company on a particular day, say rupees 5,25,000. This is purchase of yarn. Now what will be the entry in the books of accounts? Entry will be purchase account will be debited and party ABC Limited account will be credited. Now I want to check this entry in detail. I say, now in the support of 5,25,000 basically expenditure in respect of purchase has been done by the organization, and I being an auditor, I want to convince myself, yes, the purchase was actually being made. I want to satisfy myself that purchase was actually there. Now I will ask the organization to put forth before me what is the evidence you are having in support of this purchase. Now they will say that we have purchase bill in support, invoice. So purchase bill is basically a voucher in support of the entry which is appearing in the books of account. That is a voucher. And I will examine the voucher. I will examine the date of the voucher. I will examine whether the voucher is drawn in the name of the organization I am auditing. Whether it is drawn in the name of organization which I am auditing. Whether my ownership is there, ownership of my client is there in respect of that purchase. Whether it belongs to the current financial year. whether it is properly dated, and if this is appearing in the books of the current financial year and voucher is also belonging to the current financial year, I will verify this. Whether the voucher is properly stamped at the gate and in my godown, whether the store manager, the person who is in charge of the inventories, has put his stamp and signed on that voucher, on the purchase bill, I will check that part also. Now students, I am just examining the voucher to check that whether the purchase has actually been made. Now this is the process of examination, act of examining, and I am examining the voucher, and this process is called vouching. So vouching is basically act of examining vouchers. Act of examining vouchers is referred to as vouching. So vouching establishes authenticity of the transactions, whether that transaction is authentic or not, whether that transaction is right or not, whether that transaction is properly evidenced, whether I get a substantial evidence, a conclusive evidence, a satisfactory evidence in respect of that transaction. So I am trying to establish the authenticity of the transaction. So this, and how do I establish the authenticity of the transaction? So students, this depends, or this is basically the judgment of the auditor, whether I accept the authenticity, whether authenticity is established by that piece of evidence, that document is here. It is the judgment of the auditor which is very important. How I am taking that evidence, how I am interpreting that evidence, this is very important. So this process is basically what I am trying to establish is authenticity of the transaction. And voucher is the basic document which will help me in establishing the authenticity of the transaction. Voucher is the basic document which is helping me out in establishing the. Now you learn all these three lines. Whenever a question appears in the examination, then you come out with the backup which you have stored in your mind.
Yes, very good example on purchase of goods which you have accounted in your register, like purchase account debit to that party account or ABC Limited. Now you have vouched the purchase ledger. And what about that party ledger which is coming in the credit side or the liability side of your balance sheet? The verification of that account will be termed as the verification. Yes, it is an act of examining or establishing the existence and valuation of assets and liabilities. Students, please note, the verification of assets and liabilities is termed as the verification part, while the verification of profit loss item is termed as the vouching part. You need to apply your knowledge of accounting standard while going through the balance sheet items like AS9, which is on depreciation accounting, AS10, which is on fixed asset accounting, and then AS26, which is on intangible assets.
Yes, students. Act of examining, establishing the existence. Here, two terms you need to remember. When verification part is there, and verification is in respect of assets and liabilities. Say I am taking example of motor car. There is purchase of motor car in a company. So I will be concerned about two things. One is whether the motor car actually exists. One is motor car actually exists. Existence of the motor car. This is my concern as an auditor, whether the asset which I am auditing, I am verifying whether it is in existence or not. Now this is very, you see, not an easy exercise. This requires a lot of skepticism, lot of judgment, lot of estimation, a lot of things are required, expected basically out of the auditor. He has to be very careful while verifying the assets and liabilities. So I tell you, this is not an easy, rather a bit difficult than vouching part. Here students, whenever you come across the situation, you will go for auditing in companies, and whenever you go through the balance sheet of the company, means assets and liabilities, just establish these two things. Just confirm yourself on two things. That is, just derive your satisfaction on two counts. One is existence and other is valuation. These are the two important pillars in respect of verification, I tell you. If somebody asks me what is verification, I answer two things. That is existence and valuation. Now, I am taking the example of motor car. Now, motor car, say, motor car is appearing in the books of accounts of the company for rupees 10 lakhs. Yeah, 15 lakhs, Innova is there, motor car is there. Now, I want to verify. One thing I should be sure, I ask the organization to bring before me I would like to establish on two things. One is the existence, whether the Innova exists or not, whether the car exists or not. And second is the valuation aspect. Now, existence, first, documentary evidence in favor of existence. It is very good if you ask for the physical verification. And physical verification alone will not be enough, I tell you. Physical verification should be along with the documentary evidence. And the documentary evidence in case of existence of the car is RC of the car. Registration, basically RC. So car, so far as car is concerned, just ask the organization in respect of RC is the most important document in respect of the car is RC, registration certificate, and plus insurance. Another important point is insurance. Naturally, this is very important part, I tell you, whether the car is insured or not. So with these two documents, RC, please remember, if I want to now physically verify the asset, verify the Innova car, I will go out, I will check the engine number and chassis number is just printed on the RC, and I will check in that Innova whether that, and color is also mentioned on the RC. So you check the color, check the engine number, chassis number, it means RC belongs to that Innova and Innova belongs to that registration certificate. This is how I am checking the existence of the asset. So existence. Second point is valuation. So students, so far as valuation is concerned, this is another important, as I was telling you, these are the two pillars of verification. One is existence and second is valuation. Now how do I value the motor car? Say it is 15 lakh is written in the account books. How do I value? So valuation, my answer is simple. You just ask for the bill. The dealer who has raised the bill in the client's favor, the client in respect of which you are auditing the books of accounts, so ask for the bill. So bill, the value which is disclosed in the bill should be capitalized. So that is the value which is appearing in the balance sheet. So you have to confirm this is, and the process will continue. instead of every asset and liability.
Yes, this was about the verification part, and then the presentation comes, which the item should be appeared in the balance sheet. For example, like in the case of companies, the presentation of a particular item should be as per Schedule 3 to the Companies Act 2013 if it is a company. Chapter 7. Very important chapter, students. This includes or this covers the qualification of an auditor, disqualification of an auditor, appointment of auditor, removal of auditor, powers of auditor, duties of auditor, rotational provision, which is a very new provision under the Companies Act 2013, newly inserted by the Act, sealing of number of company audits, audit committee, joint audit, cost audit, audit report. These are the certain topics which we have covered under Chapter 7. You need to go through these topics, like the qualification which is given in under Section 141 of the Companies Act 2013. This is Section 141. Appointment, removal of auditor. This is Section 139, 140. Powers and duties, Section 143. Audit committee, Section 177. Sealing of number of company audit. This is again given under Section 141, 3G. Rotational provision, a very new provision given under Section 139 to joint audit, cost audit, audit report. Cost audit is newly covered under Section 148. Well, basically these are some of the topics which we have covered under Chapter 7. You need to go through each of the provision, any of the question you get from these topics. Yes, Chapter 9. Chapter 9, this Chapter 9 is of the Companies Act 2013, which is covering the aspects of accounting. That is Section 128, which is on maintenance of books of account to be kept by the company. Section 129, which is again on true and fair view of financial statement. Then the Section 133, where the central government will be prescribing the accounting standards to be followed by the companies. Section 144, which is again on financial statement, board's report. 138, newly inserted, new provisions on internal audit. Then we have Chapter 10, which is governing the provisions of auditing. Yes, Section 139, which is again on appointment of auditor. 140 is on removal, resignation of auditor, giving of special notice. Section 141, eligibility, qualification, disqualification of auditors. 142 is on remuneration of auditors. And then the Section 143, which is again on powers and duties of auditors and the accounting standards. Then Section 144, which is again a new section where a chartered accountant or the auditor is restrained from providing certain services to the auditee company. Students, the list of services provided under Section 144 is not like the CA or auditor of any other company cannot be rendered. It's like if you have appointed as an auditor of company X, then you cannot render these kind of services to that company X. So these are the services excluded from the services of an auditor. Section 144, which is again on reporting, signing of auditor's report. 146, auditors to attend the general meeting. 147, which is on punishment for contravention of any of the provisions mentioned earlier. And then 148, again on section cost audit, which is basically the Company Audit-2. This is covering share capital audit, share transfer audit, bonus share audit, forfeited shares audit, reissue of forfeited shares audit, debenture audit, dividend audit, and then the last and not the important, because usually 2 questions are asked or coming from this Chapter 9 special audit, covering 16 marks at least, 16 marks or 6 or 6, 12 marks. It is covering the government audit, NGO audit, charitable trust audit, hospital audit, hotel, cinema. A very important query, how to revise all these syllabus after the preparation, but before the one day of examination. I think sir would in a better position to explain these.
Yes, students, one day before examination, how do I revise one day before examination? This is another interesting question. Yes, this is more or less as I was explaining to you in my strategy part. 1500 hours of study, daily schedule register, then learning strategies, and then brief notes preparation and all that. And if you are prepared in a strategic manner, then revision before one day will not be a problem for you. Now, whatever you have learned, if you learn it for 4 times, so that will go very fast, I tell you. Company audit will go very fast, definition part will go very fast, points will go very fast. And the balance material you can read out so that at least you are able to give 40% of that, 40-50% in the examination. You come out in the examination. Write down, never try to hesitate while writing in the examination. Please remember this. This is very important, I am telling you. Never put your hesitation in between. Sometimes you see, you know that a particular answer is there, but you hesitate. No, this is not the answer. I do not want to write this. This may get wrong. But in fact, that is the right answer. And when you come out of the examination hall, you realize that that was the correct answer. But you did not write. So never put your hesitation in between, I tell you. Always write in a free manner. And this will more or less depend on your preparation level. So this one day preparation, one day before exam, this is totally based on your level of preparation and will depend how you prepared for brief notes, how effectively you did your learning part. So all these things really matter. What should be the manner of writing answers to the questions in the examination? Now the manner of writing. Students, this is very well taken care of by us while writing the practice manual and compilation. So I ask you to go through in a very positive manner. First you do the study material, then open the practice manual, do each and every question very religiously. And when you repetitively do those questions, so you get automatically the power of writing those answers in the manner it should have been written.
Yes, the very important thing, students, please refer our practice manual for the presentation pattern on the questions based on case study or straightforward question. You need to write the point-wise answer. Now, student usually say, "Ma'am, I have written 6 points. Then why I have not been given? Why have I have not been awarded those 6 marks?" The students usually do the mistake is they divide 1 point into 6 parts and then they say we have written 6 points. No, this practice should be avoided. If you are writing a 1 point and dividing those points into 2 or 3 parts, then you will be getting only 1 mark for that point. And again, one more thing, students, if you are writing a 1 line and again you are writing a just like you are using an active passive voice while writing your answer. In 1 line you are using an active voice sentence, and then in another line you are writing a passive voice sentence, then this would be termed as only 1 point only, and you will be rewarded only 1 mark for that. And this may create a negative impression on the examiner, for which he will be cutting your marks even if you have given your correct points. So please remember these points while answering your answer in the examination. Write concise answers covering all the aspects of particular, which of the provision is applicable to a question, which of the standard is applicable, which of the accounting standard is applicable. Please write all those provisions in your answer. Try to include all those provisions coming into your mind. Ma'am, this section is applicable, then you need to write that section also. Avoid going round and round by having one or 2 points repetitively in different ways. Yes, just I told you, if you are using, for example, there is a question, describe yourself. This is just an example I'm giving over here. You have a question, describe yourself. In one sentence you're writing my name is ABC, and in another sentence you're writing ABC is my name. Then the active voice and the passive voice points should be avoided. You will be given 0 marks for this. Even if you've written a 1 point correct point, you will be awarded only 0. So please avoid these kind of repeatedly doing all these ways of presentation in your answer during the examination. Reach the heart of the question, what the question is asking, from which standard it is asking. Please apply that standard only. If possible, you may use subheadings while writing your answer if you have time, because it creates a good impression of the examiner, and you may get a good mark for this presentation pattern. If you have an example for a particular point, please give those examples coming in your mind. How to handle law-related questions in the examination? Well, usually at IPC level, straightforward questions are there. Case study based questions are not asked at IPC level, but in case you get any case study based question, then you can handle it in this way. Yes, this is the presentation pattern for a case study based question. Like, first you need to write the facts of the case, which means what the question is stating, what the question is asking for. Then you need to write the provision standard, which of the provision is applicable to that particular situation, which of the provision of Companies Act is applicable to that particular situation, and then write down the conclusion part, like as per this section, as per the this situation, this is the conclusion. Yes, this is the one by one learning for you. Facts of the case. You need to read the facts of the case thoroughly, and while reading, make it sure that you are very attentive in understanding the case completely. Look at the problem, what the problem is asking, what the problem is stating. Is there any tax law attracted to that question? Is there any Companies Act provision attracted to that question? Is there any indirect tax law? Any other thing, any other standard is attracting that given situation? Please note and write down all these provisions all together. Yes, the accounting standards on auditing is whether applicable to a given situation, and without any hesitation, just write down those what you have gathered from your mind about the provisions and standards. There can be different combination of problems you may get. Maybe law point only, law and accounting standard point, law, accounting standard, auditing standard, accounting standard only, auditing standard only, accounting and auditing standards, and then there can be any other combination of a question you may get in your examination, and you need to write all those provisions. Yes, the last point. This is how you can conclude your answer. Like now, on the basis of this provision of the Companies Act, this accounting standard, this standard on auditing, it may be concluded that this is the example. This is how you can write your conclusion part in a law-related question if asked. Usually, law-related questions are not asked at IPC level. Well, an example I'm giving you here. Messrs. R&N Company, which is an audit firm having partners CAR and CAM, and Mr. of CAR, who is holding shares of STP Limited having a face value of rupees 1,51,000. Now, whether Messrs. R&N Company is qualified to be appointed as auditor of STP Limited. Here you can see the question is asking about the qualification of an auditor, and whose auditor? A company auditor. Therefore, the provisions of Companies Act 2013 will be applicable, and in Companies Act 2013, the provisions related to qualification or disqualification is discussed under Section 141 of the Companies Act 2013. Therefore, the provision of Section 141 is very well attracted here, and you need to read You need to write down your answer in this pattern only. Then only you will be able to get good marks. Yeah, the provision. You need to explain the provision part that as per section 141(3)(d)(1) of the Companies Act 2013, a person shall not be eligible for appointment as an auditor of a company who, that is that person or his relative or the partner of that person, is holding any security or interest in the company or its subsidiary or its holding, associate company, subsidiary of such holding company. However, in the first part, as you can see here, the person cannot hold any security or interest, but as per the proviso, the relative of the auditor may hold the securities for amount of face value. Two aspects are here. Students, please note the exemption is given to relative only, not the auditor. The exemption is given to relative only, and that for the face value, which shall not be exceeding rupees 1 lakh. In the given case, now you need to write down the facts of the case. That in the given case, Messrs. R and Company, which is an audit firm having partners CAR and CAM, but Mr. M, who is a relative of CAR, is holding shares of STP Limited of face value 1,51,000, which is obviously greater than rupees 1 lakh. Therefore, Messrs. R and Company audit firm will be disqualified for appointment as auditor as the relative of CAR is holding securities which is exceeding the limit mentioned in proviso to section 141(3)(d)(1). This is the example, this is the presentation pattern you can give while answering your question based on law, based on case study.
Yes, before moving further, we check for online query. Yes, students, Mayank is asking, sir, I want to ask how to present answers in this auditing examination. As we all know, it gets difficult to score marks in this exam. Even after having good preparation, we are not getting marks. Please check. Yes, students, this has already been answered. This will depend on your level of preparation, how you prepare. I have disclosed before you each and every strategy, and if you really follow that strategy, that is wonderful one and really works out, and consequently you score good marks. So moving back to the PPT part. Yes, general queries which we have received from students. Yes, a student is engaged in self-study and about to appear in November 16 examination and asking, at the first instance wants to do the essays and then start with the study. This is not the exact strategy. This is not the things, this is not required, I tell you. Students, first do the study material, and it is better if you first work out on 4 chapters. You see, many essays will be covered while you do the first 4 chapters, and then concentrate on watching, verification, and subsequently the company audit. And then after doing the 9 chapters, you study the practice manual. Essays will automatically be covered, and if there are still you find questions in the practice manual which are not, you see, you did not find those questions in the study material, then you can refer also essays But you do not do essays in first instance, I tell you. If you get enough time after doing this, what strategy I am disclosing before you, only then you move to the essays. But this will be a wrong strategy if you do the essays in the first instance. Yes, students, there are no changes in the essays for this May 16 examination. What kind of language is expected? Yes, students, please remember you need to write commanded language. Commanded language, whenever you will learn from the study material we have given to you, learning plus learning of the definitions, learning of the law portion, learning of points, this will give you enough backup. Your language will be automatically commanded if you learn like this. But you need to write, please remember, you need to write commanded language. Ordinary language will not do. So this is my answer.
What is the maximum limit of company audit as per the Companies Act 2013? And a student is asking, well, the maximum limit is governed by section 141(3)(g of the Companies Act 2013, where the maximum limit is the 20 companies. 20 companies. However, exemption has been given to certain class of companies like dormant company, small company, one-person company, and a private limited company with paid-up capital of less than 100 crore. This is the maximum limit of company audit under the Companies Act 2013. Now the disqualification part. Well, disqualification is provided under section 141 of the Companies Act 2013, where many of the situation has been given in which the auditor or the person going to be appointed is disqualified to be appointed as an auditor. Like if you are as a person who are as a chartered accountant, you are holding shares or securities of a company in which you are going to be appointed, then you are definitely disqualified from being appointed as an auditor. However, if the relative is holding any security, like I gave you in previous example, the relative is allowed to hold securities for face value not exceeding rupees 1 lakh. Then another disqualification is on indebtedness to the company. However, exemption again is given to the auditor that the person can be indebted for an amount of rupees 5 lakh. If the amount is exceeding 5 lakh, then you are again disqualified to be appointed as an auditor of the company. Another one more example I can give you. Obviously, I cannot just give all the provision, explain all the provisions right now. I'm just giving you examples of disqualification provided under section 141 of the Act. Another example is you have given a guarantee to the third person who is indebted to the company, then also you are disqualified to be appointed as an auditor of that company. However, again here, the exemption is given of amount 1 lakh. If the amount is 1 lakh exceeded, again you are disqualified. One more disqualification, if the relative of the person is director of the company or a key person of that company, then again you are disqualified as an auditor. The section 141(3)(g is also covered under the disqualification provision, where if you are exceeding the maximum number of company audit, that is the 20 company audits, after the exemption part, then again you are disqualified to be appointed as an auditor of the company. So these are just examples of disqualification. We have already covered this part, and in our previous sessions you can refer the session, search the sessions in the YouTube channel of ICAI Board of Studies. Now, what are the provisions regarding the rotation of auditors? Well, rotational provisions are given under section 139 2, 3 and 4. The main provision is covered under section 139(2) of the Companies Act 2013, where an auditor, an individual auditor cannot be appointed for more than one term of 5 years, and in case of audit firm, it cannot be appointed for more than 2 term of 5 years, which means in total the audit firm can be appointed for total 10 years only. Well, one more thing, the important clause or the important provision given under this section is the cooling off period. A cooling off period is if a firm or an individual is appointed for 5 years, for one term of 5 years or 2 term of 5 years in the case of audit firm, then a additional 5 years cooling off period is given, which means further the firm or the individual cannot be appointed for another 5 years after completion of its term of 1 term of 5 years or 2 term of 5 years. This is the rotational provisions, newly inserted provisions under section 139(2) of the Companies Act 2013. Another important point, which is again under section 139(2), is a transitional provision. Transitional provision means the company have to comply the provisions of rotational under the term of 3 years, which means if a company has already completed its 5 year, an auditor has already completed its 5 year as an auditor in a company, then again the auditor has 3 years for the purpose of complying the provision of rotation. But if it has completed 1 year, then again it has 4 years to complete. And again, if it has completed 2 years, then it has only 3 years to complete the rotation provision. But these were all about the rotation provision and the new Act 2013.
This how to answer a question, students, is appearing in your examination at number 2, question number 2. And this question is correct, incorrect type of questions. With reasoning you have to answer. And there are 10 questions, small questions given to you, out of which you are required to attempt 8 questions. So this question is also an interesting question. And on the other hand, please remember, this is a scoring type of question. But only writing correct or incorrect will not do, I tell you. Some students are writing only correct or incorrect and they get 0 or no on that account, I tell you. That will not carry any marks for you. You will not be granted any marks if you write only correct or incorrect. So you have to substantiate the reason in favor of correct or incorrect. When the auditor, now the question, how you should write in the examination? How do you handle this question in the examination? This we will be discussing right now. When the auditor concludes that misstatements are material but not pervasive, he should express disclaimer of opinion. So students, in this case, this seems to be incorrect answer. This answer has been given in terms of SS 705, and that is modifications to the opinion in the independent auditor's report. SS 705 states that the auditor shall express a qualified opinion. Auditor shall express a qualified opinion when the auditor, having obtained sufficient appropriate evidence, having obtained this term has already been explained to you. sufficient and appropriate audit evidence. Sufficiency is a measure of quantity, and appropriateness is measure of quality. Sufficiency is a measure of quantity, whereas appropriateness is a measure of quality. So you should be clear with these terms. So auditor shall express a qualified opinion when the auditor, having obtained sufficient appropriate audit evidence. Now, what is audit evidence? Audit evidence is information which the auditor receives in respect of accounting records and other evidence, other information. So students, having obtained sufficient appropriate audit evidence, auditor concludes that the misstatements, and now what are misstatements? This is slow learning, I am telling you. What are misstatements is difference between what is presented in the financial statements, what is appearing in the financial statements, and what was required to appear in the financial statements. Difference is misstatement. That misstatements individually or in aggregate are material. They are material but not pervasive, but not broad. Pervasive means broad, but are not spread to the financial statements. Not pervasive means spread. Pervasive means spread, but they are, of course, they are material, but not spread in the financial statements. They are not covering the entire financial statements. Of course, the misstatements are material, but they are not pervasive, means they are not spreading across the financial statements. So if they are not spreading across the financial statements, so I am expressing in that case a less, you see, I will express in that case a qualified opinion. In that case, I will express qualified opinion. I will not express my harsh opinion. And if it is pervasive also, then I can express the disclaimer of opinion. So students, this is not harsh opinion. Qualified opinion is not harsh opinion, I tell you. So this is a softer than disclaimer. This is not harsh opinion. This is a soft opinion in comparison to disclaimer of opinion. So try to understand and then learn. The auditor shall express a qualified opinion when the auditor, having obtained sufficient appropriate audit evidence. Now I have received, of course, I am having quantity wise and quality wise, I am having sufficient. It means keeping in view the quantity, quality of information, I am having enough information, means my evidence is complete. But the misstatements are material but are not spreading across the financial statements, but not pervasive to the financial statements. It means I will express in that case qualified opinion. So when the auditor concludes that the misstatements are material but not pervasive, he should express disclaimer of this statement is wrong. Why this is wrong? Because these statements are not spreading across the financial statements. If they are spreading, then you need to express the disclaimer. Otherwise, qualification will do. Qualification is less harsh opinion. Yes, a company shall disclose.
Another example of correct and incorrect question. A company shall disclose by way of notes additional information regarding aggregate expenditure and income for an item which exceeds rupees 1 lakh. Here, as you can see, we are talking, or the question is asking about a company, and it is asking for notes, additional information, which means the presentation pattern of a company is asking in this question. Therefore, Schedule 3 to the Companies Act 2013 is equally very well applicable to the given situation, which means you need to write down your answer based on Schedule 3 to the Companies Act 2013, which states that if you have any expenditure for amount exceeding 1% of revenue or amount 1 lakh, whichever is higher, then you need to separately disclose that kind of expenditure. And but in the given case, you can see here the statement written here is the disclosure of an expenditure or income is required for an amount exceeding rupees 1 lakh. Obviously, this means the statement given is incorrect. This is how you need to write your answer. First start with the correct or incorrect word and then give the reasoning in support of your correct or incorrect answer. As per Schedule 3 to the Companies Act 2013, a company shall disclose by way of notes. What to disclose? Additional information regarding aggregate expenditure and income for an item which is exceeding 1% of revenue from its operation or rupees 1 lakh, whichever is higher. This is how you need to write your answer in your examination for correct or incorrect question. Another example we have here.
Where at any AGM, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Now, where at an AGM, any AGM, no auditor is appointed, and we are also including or reappointed, also covering reappointed. So, existing auditor shall continue to be the auditor. This statement, now if you look at this statement, this is as per section 139 subsection 10 of the Companies Act 2013, and as per section 130, if I look at section 139(10) of the Companies Act 2013, it runs like this, that where at any AGM no auditor is appointed or reappointed, the existing auditor shall continue to hold the office of the auditor. It means this statement is correct. And if it is correct, so there is no other explanation which is required in respect of this. Risk of not detecting a material misstatement. Risk of not detecting a material misstatement. Material misstatement resulting from fraud. Risk of not detecting a material misstatement resulting from fraud is higher than the risk of not detecting one resulting from error. Now, what is the this statement? Risk of not detecting a material misstatement resulting from fraud is higher. Then the risk of not detecting one resulting from error. So again, this is correct type of statement, because now this is correct. Why this is correct? Now, if there is risk of material misstatement and there is fraud is always deliberate, and it is deliberate, carefully planned techniques are used while fraud is being done in the corporates. While fraud is being done in the corporates, carefully laid techniques are being applied, and it is also deliberate. Then if it is deliberately done, then I as an auditor may not be able to detect that. Then the risk of not detecting would be higher. And whereas it has happened on account of error. If it is happened on account of error, risk of there is material misstatement on account of error, So error is not deliberate, it is unintentional. When it is not intentional, naturally risk of material misstatement, not deducting, will be lower. So this is again a correct type of statement. The risk of not detecting a material misstatement resulting from fraud is higher than the risk of not detecting one resulting from error. This is because, now reason is very important, students. You need to write reason, only you will get good marks. Because fraud may involve sophisticated and carefully organized schemes which are designed to conceal it. You may also write here because frauds are deliberate, whereas errors are unintentional. Frauds are intentional and errors are unintentional. You may also write in support of this.
As per SA 570, I hope students are aware what SA 570 is on. 570 is on the going concern concept. Yes, as per SA 570, the objective of the auditor is to obtain sufficient appropriate audit evidence about the appropriateness of management's use of consistency assumption in the preparation and presentation of the financial statement. Students, before answering any correct or incorrect question, meticulously analyze what the question is asking about, what the statement is stating in its lines. Here, as you can relate, the statement is on SA 570, which is again on going concern concept. This is on going concern. But in the given statement, it states that the objective of auditor is to obtain sufficient appropriate audit evidence about the appropriateness of management's use of consistency assumption in the preparation and presentation of the financial statement. Obviously, this statement is incorrect because going concern will be asking for only going concern assumption only, not the consistency assumption. And this is how you need to write your answer as incorrect. As per the objectives given in SA 570 going concern, the auditor is required to obtain sufficient appropriate audit evidence about the appropriateness of management's use of going concern exemption in the preparation and presentation of the financial statement. Student, you need to read each and every word of a statement before giving your answer, and you can revise these kind of question in practice manual or compiler of IPC level. Don't just look at the answer, first read out the question, then hide the answer, then in your mind write what should be the answer, is the statement given is correct or incorrect, then only look at the answer given in your practice manual or compiler. This is how you can revise correct or incorrect questions for your examination. Another example, a company can issue sweat equity shares at discounted price.
Yes, before moving ahead, we check if there are online queries. Yes, Preeti. A student is asking from you, is audit limit of 20 company audits is a public only or both public and private?
Well, this limit given under section 141(3)(g) of the Companies Act 2013 is for all type of companies. However, exemption is given to certain companies only, which is covering the dormant company, one-person company, small company, and a private company, private limited company for paid up capital of less than 100 crore only. Which means if a private company having paid up capital of less than 100 crore, then it is not covered in those limit of 20 companies. Otherwise, if it is more than 100 crore, then it will be covered in the limit of 20 companies. I hope this is the answer to your query.
Yes, coming back to the PPT part.
a company can issue its sweat equity shares at discounted price. Here again a company is involved. Therefore, you need to recall the provisions of Companies Act 2013 where the issue of sweat equity shares provisions are given, or the issue of shares at discount provisions are given. Well, these provisions are given under section 53 of the Companies Act 2013, and this is how you need to write your answer, starting with the provision part that according to section 53 of the Companies Act 2013, a company shall not issue shares at discount. However, which means a company is not allowed to issue any kind of shares at discount, but exemption has been given in the case of issue of sweat equity shares. Therefore, the statement given here is correct. Don't just write that the statement is correct or incorrect, or you just giving the reference of Companies Act only and not giving the reference of particular section. Then you are not going to be awarded mark or full mark, I would say. You need to refer or give the section number also along with the answer, then only you will be granted full marks.
Yes, students, error of commission is where a transaction has been omitted either wholly or partially. Now this statement is incorrect. When a transaction has been omitted either wholly or partially, it is known as error of omission. No, what is there is where a transaction has been omitted. Now when a transaction has been omitted, then it becomes error of omission and not error of commission. Error of commission is where a transaction has been misrecorded either wholly or partially. So this you already study in your accounting part. Section 138 of the Companies Act 2013 deals with the provisions relating to cost audit.
Yes, section 138 again on Companies Act statement is asking. Section 138 of the Companies Act 2013 deals with the provisions relating to cost audit. Now, student, please write down all of the section numbers and their respective provision, what the particular section is talking about. The section 138 is not talking about the cost audit. Section 138 is talking about the internal audit. And this is how you can give your reasoning in support of your answer of incorrect. Incorrect. The statement is incorrect. Now the reasoning for the incorrect part is section 138 of the Companies Act 2013 deals with the provisions relating to internal audit. Well, there is alternate way of giving reasoning to your incorrect answer is you can also write like section 1 here. As you can see, the reference of section 138 is given. Section 138 of the Companies Act 2013 deals with the provisions relating to internal audit. Now there can be alternate reasoning. Alternate reasoning which you can give in support of your incorrect answer is the cost audit provisions are covered under section 148 of the Companies Act 2013. This is another way of giving your reasoning in support of your correct or incorrect answer. Students, you can write either way. Either the section 138 of the Companies Act deals with the provisions relating to internal audit, and another reasoning you can give is the cost audit provisions are covered under section 148 of the Companies Act 2013. This is how you can write your answer in your examination in alternate possible points.
The overall objective of the audit does not change in computer information CIS environment. Yes, this is again a correct, because overall objective remains the same, and the computer, use of computer, if you see, changes the processing and storage, retrieval and communication of the financial information. This, but it has nothing to do with the overall objective of the audit. Objective of the audit, if you recall, as discussed in SC 200, is to express an opinion on the financial statements. Objective of the audit is to express an opinion on the financial statements, and it will not change in the computerized information system CIS environment. It's a public company having average net profit during 3 immediately preceding financial year of 100 lakh can make a political contribution of rupees 5 lakhs.
Well, this is again a question on a company, a statement based on Companies Act 2013 again. Here in the statement, it is written that a public company having average net profit during the 3 immediately preceding financial year of rupees 100 lakh, and it has made a contribution, a political contribution of rupees 5 lakh. Now you need to recall the provisions of Companies Act where provisions regarding political contribution has been discussed. Student, please, you need to learn the sections, you need to learn the provision part, then only you are able to recall that during the examination, and then only you are able to write down those provisions, and then only you are able to score good marks. But this question of correct and incorrect is a very scoring question, I would say, where you can get full marks of 16. Here again, public companies having an average net profit during the 3 immediately preceding financial year of rupees 100 lakh can make a political contribution of rupees 5 lakh. Now, the provisions regarding political contribution has been discussed under section 182 of Company Act 2013. Now, what this provision is stating? This provision is stating a non-government company, well, this is restraining a government company or any other company which has been existent for less than 3 years from contributing to a political party or for political contribution. Therefore, in crux, I would say a non-government company which has been in existence for at least 3 years can contribute to political or can make political contribution, but for an amount not exceeding 7.5% of its average net profit of previously preceding 3 financial year. Now you need to check whether the amount, if you check the amount of 7.5% of 100 lakh would be the 7.5 lakh. And in the given case, the company has contributed rupees 5 lakh, which is under the limit. Therefore, the statement would be correct. As you can see here, the statement is correct, and the reasoning you need to give in support of the answer is as per section 182 of the Companies Act 2013, a company other than a government company and which has been in existence for 3 years or more financial years can contribute to any political party an amount not exceeding 7.5% of its average net profit during the 3 immediately preceding financial year, which was up to 7.5 lakhs in the given case. And in the given case, the company has contributed only 5 lakh, which is under the limit prescribed. Therefore, the contribution made is correct and the statement is also correct.
Yes, vouching I already explained to you. Act of examining vouchers is referred to as vouching. It is the practice which is followed in an audit with the objective of establishing the authenticity of the transactions, and this was explained to you in detail. It essentially consists of verifying a transaction recorded in the books of accounts with the relevant documentary evidence and authority on the basis of which entry has been made. Also confirming that now each and every word is important and you need to understand. Each and every transaction you need to verify in the books of accounts, transactions which are appearing in the books of account, and how will I check the transactions, how will I authenticate the transaction, how will I examine the transaction, I should say. I will examine the transaction with the help of relevant documentary evidence, and I will also check the authority on the basis of which the entry has been passed in the books of account. Also confirming that the amount mentioned in the voucher has been posted to an appropriate. This is very important part. I need to confirm, I need to be sure that the amount which is mentioned in the voucher has been posted to an appropriate account and appropriate amount, which would disclose the nature of the transaction on its inclusion in the final statement of account. Essential points which you need to keep in mind while examining a voucher are that the date of the voucher falls within the accounting period. First point is that the date of the voucher falls within the accounting period. It means that this is very specifically you need to check whether previous year vouchers are not presented before you for examination. So you need to be very careful about the date of the voucher. As an auditor students, whether the prior period expenditure, it may happen that the prior period expenditure may have been booked in the current year. So you need to be careful on this account whether you come across with the voucher which is belonging to the prior period. So this is another very important point, that the date of the voucher falls within that accounting period. Again, another important point is that voucher is made out in the client's name. Client's name here means the client in respect of which you are auditing the accounts of the client. The client whose accounts you are auditing. And voucher which is presented before you, say purchase bill. I gave you earlier the example instead of purchase bill. If there is traveling bill, purchase bill, invoice that has been made out in the client's name, you are auditing. That voucher, and the third point is voucher is duly authorized. Authorization, authority. That the voucher is duly authorized means authorized by the person who is required to put his authority. Say managing director, if the passing authority. This is means who is the authorized person who can sign on the voucher. Say who is the authorized person who is authorized means authorized by the company to put his signature on the document. Authorized means who is authorized by the company to put his signatures on the document whereby the voucher is completely authorized. Then we say that the voucher is authorized. So if the authority is of the managing director will put his signature on that voucher. If the authority is of the GM commercial or GM purchase or GM accounts, then you need to check the authority and cross-examine his signature on the voucher. So this is the 3 points which are appearing before your screen are: date of the voucher is well within the accounting period, that the voucher is made out in the client's name, that the voucher is duly authorized. Fourth point, that the voucher comprised all the relevant documents which could be expected to have been received or brought into existence on the transactions having been entered into. That a voucher is complete in all respects. There is nothing missing in that voucher. For example, purchase. If I am purchasing something, the transporter bill If it transport bill was also required, so transport bill should be it should be associated. It should be accompanied by transport bill also. Okay? It should be complete in all respects. All relevant documents in respect of that transaction should be presented before the auditor. That the account in which the amount of voucher is adjusted. That the account in which the amount of the voucher is adjusted is the one that would clearly disclose the character of the receipt or payments posted thereto on its inclusion in the final account. Account in which the amount of the voucher is adjusted is the one that would clearly disclose the character of receipt or payment depending upon the character of receipt or payment. And after the examination is over, each voucher should be either impressed with this rubber stamp or initialed so that it may not be presented again in support of another entry. So I will put, after auditing, after checking each and every point, I will put my stamp, rubber stamp on that voucher that it is audited, and I will put my signature initials on that voucher so that it may not be presented again before me for the auditing purpose. Yes, verification. Act of examining, establishing the existence and valuation of assets and liabilities may be referred to as verification. Now, what is this verification basically? There are two pillars I explained to you earlier. There are two pillars of verification, and two pillars of verification are existence and valuation. Existence and valuation. One is, I gave you an example in support. Example was instead of motor car, and if I have to verify the existence of the motor car, RC of the car, registration certificate of the car, is basically the document in support of existence of the car. Now, how will I verify the existence of the car? I will verify the existence of the car by that documentation, and also I may physically verify it also. And on RC of the car, just verify the engine number, chassis number, and color. Match these with the car which is physically present over in the company, and then you can tally the both the things: physical examination and physical documentary support in proof. And another important pillar of the verification is valuation. Is another important thing, and valuation is in most of the cases, valuation is basically through invoice, through bill. That is the documentary proof in respect of valuation. But this may not be possible in case building is there. Of course, there are bills, but not that labor bills or other bills are there. So in that case, auditor's judgment is there. Whatever evidence you think is proper, you may accept as support. For example, in support of valuation, you may have valuation certificate from the architect. So this will depend on judgment of the auditor. Judgment is very important. So skepticism, judgment, these all concepts you should keep in mind while checking the valuation part. So if you look at these two things, existence and valuation, these are, in my opinion, these are the pillars of verification, which I have already explained to you in detail. While verifying the assets and liabilities of an entity, an auditor is required to have knowledge of applicable accounting standards. For example, AS6 on depreciation. Depreciation is another important aspect. And you know, all of you are aware, Schedule 2 is there, which you might have studied in accounting. AS10 on fixed assets. These are the relevant standards which you need to go through. AS26 on intangible assets. The auditor is further required to check the presentation of various items in the balance sheet and statement of profit and loss. For example, as per Schedule 3 to the Companies Act. Priti, you throw light on this last point.
Yeah. The very important part of verification is about first checking the existence of a particular asset in the organization. Yes, just sir gave example of a land and building. Then you can get the sales deed of that particular land in your hand, and you can verify who is the owner, who was the past owner, and who is the current owner of that land and building. Then the valuation part is maybe based on the valuer of that land, that the stamp duty value may be the value of that land to be accounted in the balance sheet. There may be another example of debtors. Debtor is also a part of balance sheet. Debtor, you can go for the external confirmation, which is given under standards SA 505. You can refer the external confirmation of that debtors. Then this is the full proof. If you get the reply from the debtor that yes, this is the amount outstanding in the account of that balance sheet. These are some of the examples of verification, how you would verify a balance sheet item, which includes a fixed asset, intangible assets, investments, debtors, and stocks, and so on, cash and bank. And the final part is, after the existence, is the valuation part, and then the last part is the presentation part, where you need to comply with the presentation of balance sheet. Just like in the case of company, you need to comply the presentation as per Schedule 3 to the Companies Act 2013. Now, if we are talking about the debtor part, debtor is covered under verification of asset. And what about the bad debts, which is also a part of debtor? That verification is not a verification, that is termed as a vouching. Vouching, bad debt is covered under vouching part, and the debtor is covered under verification part, which is in balance sheet.
Yes, students. This is, I told you earlier, this is the last lecture wherein we have taken your queries. We have gone through the entire scheme, strategy, and then we have covered a few topics for your understanding. So thank you very much. Wish you all the best for the ensuing coming examination. If you have any queries, you can send mail to us or contact us at 0120304595. You can also send mail to us rajeev.sachdeva@ici.in or karuna.bhansali@ici.in. Thank you very much, students, for patient listening.
Yes, thank you, student, and all the best.